We are in a generally a pretty good spot. Certainly the industry is talking about a crypto winter, the pressures from the regulatory environment, but I actually see it as a crypto spring. We are seeing regulators around the world really moving forward, finding ways to make crypto and digital assets a responsible type of innovation and development. We're seeing legislation in Congress that are being debated around digital assets and around stablecoin. Last month, we also saw Europe passing the Markets in Crypto Assets Bill, MiCA, which is terrific. And then out here in Asia, we're seeing a lot of conversation and development in the digital asset space, and in particular in stablecoins. Here in Singapore, where I'm based, as you know, Circle has an in-principle approval license as a major payments institution. There's active conversation here in Singapore on the development of digital assets. There are rules that are coming out that provides greater clarity. In Hong Kong, there is a very, very vibrant ecosystem being developed. Active conversation on stablecoin regulations that's expected to come out at end 2023, beginning 2024. In Japan, we've heard from the FSA that they're looking to put out guidance on stablecoin. It's actually quite positive, and this industry goes through ebb and flows, and I see that we're in a crypto spring instead of a crypto winter. US is a very unique market, and its regulatory framework is one of the most complex and complicated in the world. And it's a cacophony of voices in terms of the debate between different agencies that are independent, as well as agencies that are part of the executive branch that can debate among itself. Interesting though is there is, at least in the United States, a active conversation around how to think about digital assets. There is an active conversation around stablecoins and how to regulate and set the appropriate framework for a trusted and transparent stablecoin offering. And that's real progress. Then there's the part which is happening out here in Asia, which is that most of the jurisdictions are actually not as complicated or as complex, at least in the governance, as the United States, right? In Singapore, there is one regulator that's a central bank, as well as the supervisor and the regulator across, whether it's securities, commodities, digital tokens, etc. It's similar, for example, in Japan, you have the FSA that oversees different types of financial products. In Hong Kong, you have HKMA as the main supervisor. And then you have SFC on securities and derivatives. So there's less players in all of these different markets. That's why I think we're seeing a lot of progress being made out here in Asia. And the debate is less complicated. I think everyone is looking to the United States as one of the leading economies and regulators in the world in terms of what it wants to do. There's significant progress being made. And, it's hard to predict congressional action or inaction. But I think that, right now in this period, we're seeing at least some conversation in a positive direction of how to look at digital assets and stablecoins in particular. There are a couple of things to think about. One is, especially this year, we're seeing at least digital currency prices moving up overall as a market. There's a lot of activity there. Companies also building. There's a real focus coming out of 2022 into 2023 to heads down and build. For a company like us, Circle, we've been launching new features as well. One thing that we did was to launch the cross-chain transfer protocol, CCTP, that allows more easy movement of USDC across different chains. That makes it easy for developers and greater trust for our users. So everyone is building during this period. And then there's the piece that I touched on at the very beginning around regulation. And there are now, in writing what regulations could look like. And we're engaged all across the region and around the world to work with stakeholders and regulators to shape those conversations. We are seeing digital currency, in particular stablecoins, being used One example is our partnership with UNHCR, Stella Foundation, as well as MoneyGram to provide aid to Ukrainian refugees based on USDC. We are seeing, again, really creative solutions being developed on the blockchain technology, on stablecoins, delivering real value for users. I mean, for some of the folks in Ukraine, this is a quick way to get aid. And they're able to move the money, whether they're in Ukraine or outside Ukraine, where they may be taking refuge in a period of time. Most of the focus have been on digital currency in terms of trading. I think what we're seeing in this phase is a development of digital currencies, digital assets, in particular stablecoins, for kind of real world use cases, whether that is providing funds as remittances, or supporting cross-border payments, or as a native currency for DeFi applications. You brought up CBDCs, and those are going to be part of the conversation. It's not an either-or kind of world. There are benefits and cons to CBDC versus stablecoin, but our belief is an open, interoperable system. In that way, you can actually have both operating. Some places, some users may prefer a CBDC for a number of reasons, and other jurisdictions and other users may want the speed of development, the interoperability, and perhaps faster technology that are built on private issue networks. And the important point here is, as long as those privately issued stablecoins are trusted and transparent, as Circle strive to be. Asia plays a very, very important role in the crypto market. There are numerous reports from Chain Analysis and others that talk about just the use of digital currency in this market, and it's world leading. And there's a number of reasons for it, right? I think the market's much more dynamic. In some ways, the challenges that led to the creation of Bitcoin and blockchain really amplifies here in terms of how do you move money around? What are good ways to store value? And there are a couple of uniqueness about the Asia market where digital assets, such as stablecoins, are extremely helpful for. This is a region that has a higher share of traded GDP than the United States or even Europe. This is a region, as you know, with migrant workers that work in a number of different countries and have to send money to their loved ones. These are natural use cases why users as well as businesses are adopting digital assets to solve their problem, because perhaps traditional banking is either more costly, slower, or they may be unbanked or underbanked. Asia is really a really interesting place to be, and there's an opportunity here with the regulatory framework that's being developed to allow Asia to lead in digital asset adoption. The other piece that I think about is, and having been someone that worked in the internet sector, Web 2 started mostly probably in the United States. And in recent years, we've seen adoption here in Asia. But Asia was a laggard, and it was until greater penetration of cell phones and smartphones, and penetration of broadband, lower cost for users to get online, did the Web 2 unicorns get created all across this region. And I think a lot of the policymakers that I speak with, as well as the companies, are really thinking about Web 3 as a way to leapfrog, right? They've now learned how the internet works, how do you develop, how do you create the ecosystem? And now we're seeing companies as well as countries learning from that experience, thinking about how do we position their workforce to be Web3 ready? How do we develop as developers? One report I saw from Electric Capital was, for example, India being one of the fastest growing countries in the world in terms of developers. And Asia is not that, like the rest of Asia outside of India, is not that far behind. And these are the fundamental blocks that's going to allow the region to leapfrog and to think of what's ahead. If you were in closed door conversations with most of the policymakers around the world, most of them recognize that blockchain and digital assets are the way of the future. It's not going away. I think what you're really talking about is the debate of how to create the appropriate framework that promotes innovation on the one hand, but also have investor protection and consumer protection. And you can have both, right? They're not mutually exclusive. The fact that Europe has passed the markets in crypto asset legislation is a significant move. That is sort of the equivalent of the passage of GDPR on privacy that then really got the rest of the world in motion, thinking about a serious jurisdiction, creating a framework, being very explicit on the existence of this asset group, the existence of this market, the creation of stable coins. They're all written there. And I think all of the countries are going to take a close look at not only Europe, but also what's in play in Congress, and think about, okay, how are their frameworks, how interoperable are they going to be? And finding that balance. I think when I see the reports around crypto adoption, most of the reports talk about adoption in these countries that you talked about where it is banned. So clearly there's a demand for it. There's also a lot of activity in these markets in the development of blockchain technology in these countries. And regulators and policymakers know very well that they have a once-in-a-lifetime opportunity to do that leapfrog process that I talked about earlier. How do they create the environment and the framework for their own homegrown developers, businesses to be able to onboard onto Web3 and move and grow globally beyond their borders? In a way, it's the red herring, right? I think the conversation around digital asset have focused on this trading, largely speculative aspects of the industry. What I believe in is there's real world application for blockchain technology, and stablecoin being one of those. I think it behooves us not to focus more of our time and energy thinking about how we're solving real world problems using the amazing technology that we've been provided, and think about how are we making lives easier for businesses, for individuals. How do we increase and improve economic prosperity? How do we solve problems of financial inclusion? Those are, I think, much more meaningful in terms of where I think the industry is going to go. And I suspect that, decades from now, we're going to look back and look at, like, did we spend our time thinking about the price of various currency, or do we spending our time building and really shaping the framework to allow the technology to live up to the promise that we all aspire it to be? First of all, I would say that we collectively are in the early days of blockchain adoption. When we look back at previous adoptions of technology, whether it is the advent of the internet from dial-up through broadband, from the creation of sites on GeoCities to now publishing on Substack, there's been a really longer than we probably thought, cycle in terms of adoption, and a lot of things have to come together for the technology to really flourish. Even the internet that we know of today is vastly different from the internet that was pre-broadband and pre-mobile phones, right? We were all, at least those who had access to the internet, were on desktop computers, on static websites. This is before the days of Ajax and before Cold Fusion, and we saw a vast shift as bandwidth became more popular, as compute gets more affordable for more creative, dynamic websites and really applications that were built on websites through the web browser delivered to the user, either on the desktop and eventually on mobile phone. And I think that's the way we should also think about the adoption of blockchain. Yeah. There's a really great chart from Anderson Horowitz on their state of crypto that looks at the adoption rate of the internet and then track the adoption rate of crypto. And the lines follow, not a perfect correlation, but closely. So I think that's a way to really think about that long cycle of the technology. And there are many problems that I believe we need to solve for greater adoption of blockchain. At the end of the day, the users don't care about what the technology is on. You and I, when we go to pay a bill at a restaurant, We want to take out whatever device we have. We want to, tap it or, on a point of sale, or we want to scan a QR code. We're not thinking about, is it really on MasterCard or Visa or on some other rail? Those are really not things that a user care about. They care about the user experience. The onboarding of a user into the Web3 space is still much more clunky than it should be. Users are expecting more from this industry. It is hard to walk a user through creating, a custodial wallet, to get onto a place where you can on-ramp and off-ramp, and to figure out, okay, what is the gas fee and what is the thing that you're actually trying to purchase, and then how do you move it from one place to another. These are things that are, in sort of the early stages of the internet. And I think as the industry comes together and continue to build, we're starting to see, ways to solve that. Earlier, I touched on CCTP protocol, where we're able to move essentially a minted USDC on one chain like Ethereum to another chain such as Avalanche. Previously, this was done through more complicated things like bridges and wrappers, etc. We're now able to do that natively. This is going to create greater trust, less vectors for attack, and it's going to make it easier for developers to be able to develop across multiple chains, because their users or their business users are operating on different chains. So how do they do that? How do they meet the end users? Like, users don't care, what it's built on. They just want it to work. I'm an optimist, so I think it could be Singapore and Hong Kong. And I think the beautiful thing about this industry is that it's not a zero-sum game. This is like a lot of financial services. If done right, the sum are greater than the parts. And you can have an active ecosystem here in Singapore. You can have an active ecosystem in Hong Kong. They can interact. There's a lot of talent in both places. Natural, differences. Obviously, in Hong Kong, there's a greater share of developers from China who are extremely talented and extremely capable, and we should have that developer be able to build. And same thing in Singapore as a place for Southeast Asia, where you have some of the greatest minds in the region coming together to build. So I don't think it's an either or option for the industry.